Derek, the fiscal update is out and the deficit is now projected to be $343 billion. What's your take on that?
Well, it's a big number. It equates to 16% of GDP, and you'd have to go all the way back to the Second World War to get even close to that. Now, that being said, it is at the high end expectations, whether it's 300 or 343. I think a lot of the sticker shock is probably gone by now. So, but that said, it's a concern. And I think, of course, what wasn't in the statement today, it was very much about what are the estimates for the fiscal deficit this year. We have no idea how the government plans to address it. That's been left for another day. And, we will get a budget likely in the fall, and there will be growing pressure on the government to provide the other side of it, which is, okay, the deficit's this high, now what do we do about it? So it's a concern, but I think a lot of these questions are going to be left for another day.
And we also heard about the debt is going to top $1 trillion. How are we going to pay for it all when the pandemic is behind us?
Well, I suppose the good news is that we don't have to pay it all off. I mean, governments have more capacity to borrow than a household, a business. We're in an era right now globally of high debt. And I think what this crisis assures us is that the debt will be high for the foreseeable future. Now, that being said, I think an important thing, and something they stress in the update today, is that with interest rates as low as they are, the capacity to borrow is much higher than it used to be. In fact, their debt service charges are even dropping this year relative to what they saw before the pandemic, even with these kind of debt levels. And that's because of low rates. So it does give the government some room more room for leeway. But that said, at some point, it's going to mean some difficult decisions, even if the economy recovers, which they expect. It's going to probably mean that they're going to have to consider higher taxes, spending cuts. That's not something I would anticipate in the very near term.
And what does the deficit and debt mean for the average Canadian?
I think, it comes back to the implications for the average Canadian. I think right now it's all about getting through the pandemic, and the government needs to think about how do they ensure recovery remains on track. And it's likely going to mean more spending. And so the focus right now is really on that, I think, for the average Canadian. Longer term, yeah, I think that's where the implications are important for the deficit. Again, the timing of it is an open question, but I think for those looking at their wealth plan, one may have to build in some expectations that tax rates are going to remain where they are, and particularly for higher income Canadians. I think for investors, I think it could become a bigger issue. Again, I don't think this is something that they're going to address while the economy is still weak, but as it recovers, we may get a clear message on that front.
And I want to touch a little bit on spending. How much more spending do you think might be necessary to support the economy?
Well, I think that's an open question. I think one of the takeaways today is that, the government is assuming some of their programs get extended again. I think the wage subsidy, for one, based on the estimate of just over 80 billion, it's well above the current take-up right now. So that implies that they'll be extending that program. This big CERB benefit, which is the emergency response benefit for household, the unemployment coverage, that, based on the estimates, may end. But again, I think it ultimately depends on, do we have a W-shaped recovery? If we do, then pressure will grow on the government to spend even more that's built into their plans. So ultimately, it boils down to the shape of recovery. I'm hoping, and the finance minister highlighted today, that hopefully the worst is over, and that for now, going forward, it's going to be more about managing recovery and then ultimately managing the deficit and debt.
And talking about recovery, what are the potential pathways for economic recovery, and how long do you think before we get to the pre-pandemic levels?
Yeah, it's a good question. The government today, there was a bit of forward looking, but it was on the economy. They didn't bring it back to what it means for the deficit, but they are building in some cautious economic assumptions. It's still very consensus in there. They're expecting a rebound next year, but it's not going to make up fully for the losses this year. And you won't get back to pre-virus until sometime in 2022. That's what their forecast implies, which isn't that dramatically different than consensus, a little bit more pessimistic. But they do run a couple other scenarios, and they run, if there's a second wave. And so they run a weaker scenario, and but it very much in line with what a lot of forecasters are looking like. They still believe that their baseline is a rebound next year, which to me implies a pullback in the deficit next year, but it won't go all the way. I mean, it's still going to be a pretty lofty deficit and growing debt as we move over the next few years.
And certainly, Fitch downgraded Canada's debt to AA+. With this fiscal path, do you think there's a risk of further downgrades as well going forward?
Well, you know what? It's interesting. I think, their outlook was stable. And now this number has come in higher than I think most expected. I don't anticipate that it's enough to lead to a further downgrade by Fitch, but I wouldn't be surprised to see the other major rating agencies move. They're still at AAA. But keep in mind, even if they move a notch, which was what Fitch did, it's still a pretty highly rated debt. A lot of debt around the world is negative yielding. So, there's still going to be a positive yielding debt in Canada. So I don't see any trouble with the Canadian federal government, funding its needs, particularly with the central bank likely to buy about a quarter of the debt stock. And that's an important source of funding. So I don't see this. I think with other debt levels around the world going up as fast or even faster in Canada's, I don't see this being a huge issue. I see ratings probably remaining stable. The question for me is out a couple of years. If they don't have a good plan in place to manage the debt, then you could start seeing a stream of downgrades.
Okay, we just have a few seconds left, but I just want to find out, what is the impact on the deficit going to be on the loonie going forward?
Well, interesting, today the loonie was strengthening ahead of the release of this, and in the immediate aftermath, I didn't see any pullback, but I wouldn't be surprised to see a bit of a pullback given the higher deficit number. It's not going to be dramatic. Again, a lot of this has been priced in. I mean, we've heard of a downgrade. Again, even that was priced in when Fitch moved because there wasn't much impact there. With other governments facing the same quandary, I don't see any immediate impact on the loonie. And the government does go a fair length today to show that Canada's debt level is still relatively low compared to the United States and a lot of the other big borrowers. So, I'm reasonably constructive on the loonie, but again, longer term, Canada will have to address some of these fiscal issues.
Derek, thank you very much for your insights.
Thank you.